Everybody. I'm Michelle Cohen from IFRA Law. Thank you so much for joining us today for the third webinar of the iDEA Growth Association Power Lunch Summit in partnership with GeoComply. Today, we're going to discuss M&A Forecast 2023. Before we begin, there's a few housekeeping items. If you have any questions, please use the Q&A function in Zoom, and we will try to address them prior to the end of the session today. A recording of the webinar will be sent to you afterwards, along with the survey. We'd appreciate if you complete that. And we encourage you to let us know of any topics that you'd like us to address in future webinars when you complete that survey. I wanted to introduce our panel. Thank you, panel, for joining us. It's a great panel that we have today. I'm going to let our panelists introduce themselves. So we'll start with Andrew Fabian from Citi.
Thank you, Michelle. I'm Andrew Fabian in the Tech Investment Banking Group at Citi in New York, where I co-head our sports betting and iGaming coverage globally. And in addition, I was the co-founder of Betcha Sports, a real money gaming business that was acquired by Vivid Seats and has now been rebranded as Vivid Picks within the Vivid Seats platform. It's a pleasure to be with everyone today. Thanks,
Andrew. Over to Jeff Ifrah.
Thank you. I'm Jeff Ifrah. I'm the General Counsel of iDEA. We're now a 35 plus member strong organization representing all aspects of the ecosystem of online casino and online sports betting, from B2C operators to payment processors and IT suppliers. So it's very nice to be here and really excited about today's panel, and thanks in advance to Melvin, Andrew, and Michelle for participating.
Thank you. And over to you, Melvin.
Hi, guys. Thanks for having me, of course. Very honored. I'm a managing director at Blackstone within one of our private equity groups, and I help lead our investments across gaming, across certain parts of the tech and the media ecosystem and business services. And I also helped lead the deal for Blackstone to invest in GeoComply.
Great. Thank you. Launching into our first topic, I know that just in our introductions, there was a couple of descriptions of the ecosystem, and I think that's a really important point, because anytime I mention that our firm does a lot of work in gaming or sports gambling, people tend to think of just the operators, and I have to explain that there is this huge ecosystem of a variety of players, including all sorts of service providers, including geolocation and payment providers and affiliates. And I think a lot of folks outside our industries don't really get that there is this giant ecosystem. But that leads to the first topic we thought would be of interest to our audience, which is, before we launch into heavy M&A land, is there room for new B2C players in mobile sports betting or iGaming? And I'll throw that out first to Andrew.
Thank you, Michelle. I think that over the last few years, we've seen a lot of excitement around the initial products that the early market leaders, including DraftKings, FanDuel, BetMGM, and others, have brought to market. But we do believe that there is significant opportunity for meaningful technology innovation in things like improving and enhancing the user experience in sports betting. And we think that there's opportunities for existing operators to do that themselves. But judging by other industries and sort of the history of innovation, oftentimes that comes from different businesses, either coming from other areas, namely companies like Fanatics that have established a very strong position in sports-related e-commerce, have moved into collectibles through an acquisition of Topps, and now are moving into the sports betting space and have some innovative ideas around how to do that. Or around venture capital backed businesses like Sleeper, or a better, leveraging the simple bet, technology, focusing on things like microgaming to simplify things for the users. I think that there is substantial opportunity for new businesses. And lastly, would probably mention a new category within sports betting, something like the exchanges, where we've recently seen Mojo and Sport Trade, along with a handful of others attacking it from a slightly different model, bring products to market. And if you look at Europe, you see that there is room for exchanges, 8 to 10% market share for Betfair over there. And we think the products here are even more interesting. So a lot of excitement. We think there's a lot of room for some new players, and it's going to be interesting to see how things evolve.
Thanks. Melvin, from your perspective, what's your views on whether there's room for new players?
Yeah, it's a really good, but also really difficult question to answer. I think Andrew hit a lot of the key key points. I think there's always room for innovation in the market that is as inchoate as sports betting is. There's always room. So I'll sort of start with I guess I'll launch from there. At the same time, there's a feedback and a flywheel that allows current incumbents, in theory, to innovate faster, better than others, especially given the sort of customer acquisition issues that I think most people are aware of, and the cash flow issues. I think it could frankly slow them down, which again could create for opportunities for smaller, more nimble, sort of new entrepreneurs, if you will. So I think there's a tension there in the sense that there's the information on one side, the information, the heft, the learning machine on the side of the incumbents, but there's a nimbleness, the ability to start from scratch, and ideally, an understanding of a problem and how to solve it, more at the customer or at the consumer level that could happen from entrepreneurs. So there's an inherent tension there, but I think the short answer is yes, but it's certainly difficult and not easy.
And sending it over to Jeff, what's your view here about whether there's room, including on the B2B side?
Yeah, well, I mean, I think Andrew and Melvin just really covered the whole issue. I can tell you as a lawyer from a law firm perspective, I mean, certainly, startups and, engineers and tech savvy entrepreneurs certainly don't want to hear there's no room for them. I mean, they've probably heard, there have been predecessors who've heard no before when entering a crowded market. A lot of times people focus on, well, what's it going to take for me to get market share? And that's, an ugly answer that involves a lot of money. But, I think that there's a lot of people focusing on new product ideas. I think there's people focusing on new marketing strategies, on ways to acquire customers. But there also are folks focusing on other important questions like how to retain customers and what kind of tools are out there that can improve customer retention. And that's not that is a B2B product. Suppliers of and innovators in the customer retention area are not normally associated with B2C brands. They're licensing or selling their products to B2C brands, but tackling some of the big problems that B2C operators have, like the cost of customer acquisition, and not just continuing to throw money at it, but thinking of new ways to help them retain existing customers and improve and increase the lifetime spend of customers who are going to B2C sites. I definitely think there's a lot of room for that. And, as Andrew and Melvin both said, there's also a ton of other innovation that's going on in, generally in the supply chain. But I think that anyone who wants to enter this market now as a new B2C operator, and even a Fanatics, I mean, they have to ask the question of like, what product, what's going to differentiate our product, and does it matter? And what kind of marketing strategy are we going to have, and does it matter? If it's just simply a matter of trying to market to an existing database of customers that you have, like on the retail sports side, I'm not sure that's really enough. And I obviously assume that with all of the brain trust that Fanatics has acquired on the gaming side. They're definitely not going to just simply be relying on the idea that they can further monetize existing customers on the real money gaming side.
I think that takes us to a quick poll, because you've raised an important issue about branding and marketing and retention. Do we have our poll available? And we talked about this offline. How important is branding to customers in online gaming? So if I'm maybe a new customer to online gaming, am I going to go to the main brand that I am familiar with? The one that I see on TV over and over again? Am I going to go over to Penn because I'm a Barstool fan? How important is branding to customers in online gaming? Very moderately or not very important? Maybe I'll just go with the best bonuses. So it looks like very important, which does make a lot of sense. And I guess validates the ad spend that I see, at least in my jurisdiction where we have online gaming. Great, thank you.
Interesting that there's such a high percentage of people among our attendees here saying that it's very important, because you know, if you asked Andrew or Melvin what brand, what does each brand mean to a customer, you know, I'm not sure that you can readily define today's existing brands as having a meaning or existing or creating a community around them that means something. But maybe that question was interpreted differently than I interpreted it.
All right, moving on. When we talk about M&A activities, we can consider that there's likely to be both vertical and horizontal integration. And I just want to ask our panelists, I'll go back to start with Andrew, about how do you see the future of either vertical or horizontal integration in the industry?
Absolutely. Thank you, Michelle. I think starting with vertical, I think we've probably already seen that happening to a degree, going back to the DraftKings de-SPAC, where you talk about brand. DraftKings was a well-known brand through its DFS origins, but an important part of that deal was the combination with SB Tech. And it's taken some time, but the migration to them having a fully integrated tech stack now, with the DraftKings front end sitting on top of SB Tech and moving away from Kambi. On the horizontal side, and as a sort of internet and brand focused banker, that's probably where I focus a lot of our attention. We think that there is a growing convergence between gaming and the broader sports and entertainment world and ecosystem. And in the gaming world right now, where we're seeing the CAC wars and the prospect of new market entrants, it feels like the marketing spend and the cost of acquiring customers isn't going down anytime soon. We think that the focus is going to turn towards the value of those customers and the ability to offer them adjacent products and to monetize the customers or the users across a variety of areas. So thinking about adjacencies like ticketing, merchandising, even NFTs and different types of digital assets, collectibles, all of those things touching on the 82% of Americans that self-identify themselves as sports fans, but thinking about how can we provide them with a whole suite of offerings and integrate those through things like loyalty programs. And that is very much where we see the world going. And in terms of things like M&A, expect that we're going to see more and more cross-industry deals to enable those sorts of platform offerings for the sports fan customer.
Really great insights. Thank you. Melvin, from your perspective, what's your view about future horizontal integration or vertical and things that you may be seeing over at Blackstone?
Yeah, of course. So, I do think first, I think Andrew's commentary was pretty robust. So, I think the only thing that I can say from our perspective is that we probably spend more time trying to understand the vertical integration from a risk perspective. And from our perspective, the reason is, we like industries like gaming, and we like, particularly particularly in the B2B space, where we can invest behind or partner with companies that are point solutions or are providing picks and shovels to the large sort of sports books, if you will. That's sort of where we like to invest. And so for us, one of the major risks as we think about that investing in that area is, one, the risk of insourcing. So the sports books doing this stuff themselves. And the other is the risk that our customers get purchased and get migrated to different solutions other than the ones that we have. So, and I can tell you that, as we sit and debate amongst ourselves, those issues tend to dominate the risk associated conversation. And I think what that tells you is that we certainly think that this is an industry that will go through pretty meaningful vertical integration or M&A. And I think I just have less of a strong view on the horizontal side, except that I could say there is somewhat of an analog or a template with what's happened in Europe, where you do have pretty meaningful consolidation that has happened over the past few decades there. So I'd expect us to see something like that, certainly. And again, we're already seeing it. So I'd expect some of that to continue.
And the fact that this industry is so heavily regulated and supervised, and there's all sorts of prior consents and filings that are necessary, does that factor in, Melvin, or is it just it's part of doing business and you all just factor that into timing and spend?
Yeah, I think I think we factor it into timing. So I think the fact that the industry is regulated just means there's more friction to getting deals done. But I don't think it means, I don't think it necessarily means that highly strategic, highly valuable, highly economic deals won't get done. And it's not as if, I think Jeff is going to have a much stronger view on this than I will, but this is not a dominant industry that is a target of antitrust regulators. So that's the kind of risk that I think we spend very little time on, and put aside some of the past deals that people looked at. But that's a risk that we don't spend too much time on. So I'd probably pass it to Jeff to see what he thinks on that. But I think overall we spend much more time focused on what I articulated earlier.
Right. And Jeff, over to you. Your thoughts on integration and what you see. I know you get a lot of calls from folks who are considering acquisitions or are trying to understand what they'll need to do at mainly the state level. Where do you see things going as we wind up 2022 and head forward?
Yeah, I mean, I think that the view of investors and investment banks, I mean, we've worked with Blackstone and Citi on deals and others, and I feel like no one's really approaching this industry and saying, oh, that's going to be impossible. Oh, we'll never be able to do that. Oh, that license ain't happening. So, that's good. I'm not sure that always reflects a true understanding of necessarily every detail of what's involved. But obviously, a lot of deals that are done by large, investment houses involve a certain level of regulation. The regulation here is significant, but by working with, I mean, this, you've done this too on the legal side, and working with regulators, especially when you're dealing with a large investor who themselves may be subject to an array of supervision either at the state or federal level. That gives regulators, a level of comfort that may lead to relaxation of certain licensing and regulatory requirements that can more easily facilitate and allow that investment to be made. So that's good news. I think that certainly certainly it's very easy on the horizontal or vertical side to integrate with someone who's already licensed, and certainly that doesn't present any issue at all. We've seen a lot. We've seen a lot on the fintech side, on the payment processing side, in the both investor and M&A side. Not surprisingly, I mean, the transaction volume in this space is humongous, and the field of players was extremely narrow. So now that banks have finally started to sign off on onboarding this industry, it's not surprising that some very innovative financial solutions and fintech players are coming to the table and starting to swap up other processors who have licenses, not just money transmission licenses, but also supplier licenses. And we're seeing the same thing when it comes to identity suppliers and other suppliers who have to operate in the system. I think that one thing that recently we were just talking before preparing. We were just at this Laguna event, which was an excellent event that EGR puts on each year, and Matt Davey, who's just a brilliant investor and has done some amazing things in his young career, was saying that there's a thought out there that that companies, in order to save on expenses, just gobble up companies that they're spending a lot of money with in order to save money. And so when you think of vertical integration, like, why doesn't a DraftKings just go buy the payment processor, or why don't they just go buy a huge media company who they're paying to acquire customers? And we've seen already what happens, and it's not as much of a surprise. But just to address that issue, and Melvin alluded to that. I think he had to jump off to attend to something, but hopefully we'll be back. But here he is. But he alluded to that because he said, you can't always. When DraftKings acquired SBTech, to use that example, so SBTech had other contracts with other B2C providers, and so the question is, well, what happens to that, and are they going to perform as well as our captive platform? Are they going to perform as well, and are we getting the full benefit of that acquisition if they can no longer support these other customers who aren't going to want to use them because they're not going to want them to house competition to DraftKings? So we see the same thing happening. We would see the same thing happening if they acquired a media house or a payment processor or another supplier in the industry. Sometimes, and I think this was Matt's great point, is that sometimes these other suppliers really need the full industry to survive and do what they do the best, and they're not really true candidates to go captive to a B2C provider. So there are, I think, some sort of limitations in this industry that may not necessarily exist in other industries, because these suppliers really can't or shouldn't go and essentially become captive on an exclusive basis for someone. They sort of need the whole industry. It would sort of be like doing identity verification for just one client when you've historically been doing it for 40. And so to make that make sense is very complicated and challenging.
That makes a lot of sense. We have another poll question for our audience, where we're going to consider whether audience thinks there's going to be further consolidation among the brands in the online gaming space. Yes or no? Sorry, panelists, you're not allowed to vote. Just the audience.
Michelle, just while people are voting, I see there's also a question in the chat.
Yes, we have a question, and thank you for posing the question. And I think it actually takes us right into our next topic after our poll is done, where we're going to talk about marketing spend and client retention, some of which we've covered a little bit here in talking about how do we retain clients, and there's a huge amount that's being spent to get customers. But how can we retain them once we spend it on? And yeah, everyone seems to think there will be further consolidation at 95%. Thanks, GeoComply. Moving on, and this actually goes to our question. which is a great question. How important is usability and functionality of the operator's app in retaining customers following their large ad spend? So I saw your commercials and over again, and I've come to the app. How important is the usability on that app and functionality to keeping me spending? I will send it over to Andrew.
Thank you, Michelle. I like to think about the metaphor of the leaky bucket, right? No matter how much water you pour into it and no matter how fast you keep pouring the water, if there's too many holes, eventually it's going to leak out, and that's not going to be a very efficient way to get the hydration that you're looking for with the bucket. So I think the way that relates to ad spend is ultimately you have to have a product that people are going to enjoy using and want to keep using in order to warrant the kinds of advertising and the kinds of advertising expense that you're seeing. I mean, putting hard numbers to it, we're seeing cost of acquiring customers in online gaming these days anywhere from $700, $750 to even $1,000 a user during certain peak periods. So that kind of spend is only warranted if on the back end you're able to successfully monetize and have workable unit economics. And I think that looking historically, the products that exist in market today are probably good enough to be able to warrant some sort of good ratio of LTV to CAC, which tend to look for like a 2.5 or 3 to 1 ratio. But we do feel that the product innovation is going to be something that's going to drive more engagement from the existing customers to drive more monetization, but is also going to spread the pool of users who can be brought into online real money gaming, right? I think that right now, a relatively small fraction of the large percentage of Americans who are sports fans and do participate in offline casino activities are actually doing it online, and having simplified set of offerings, things that are more fun, more community oriented, have more social features, will probably drive more engagement and more monetization to justify the marketing spend.
Just a quick follow-up question. We've gone from 2 years, essentially, when people were largely home, to now a situation where kind of post-pandemic, people are leaving their homes and traveling and doing more. Do you think that the fact that we're kind of now becoming a more mobile society again, does that affect the marketing spend at all, or the efforts at client retention, since maybe I'm not just stuck in my house, on my computer, but I can do all sorts of other things, go to shows, go to concerts, travel, etc.
Yeah, in my view, I think there's lots of different things, competing for people's affections, and the fact that people who have been hungry for experiences and that there's pent up demand for that, means that maybe there are some alternatives. But the beauty of online offerings is that you have the ability to participate on it or at a moment of convenience. So if people are, going to be going out more, it still means they're taking the subway to the theater or to the ball game. And on that subway ride, there's the opportunity to, pull out your gaming app and, play some games or, place a wager on the game. So I personally think that, the world reopening and people doing more in-person interactions won't negatively impact the participation in online and activities, and if anything, will actually spur it even further.
Melvin, is that similar to what your view or that of your overall organization might be in terms of post-pandemic gaming activity and just looking at the marketing spend in this industry, which is huge compared to some others?
Sure. So I guess there's two questions embedded in this broader discussion. One is just how much and how much does usability and functionality matter? And then the second question is around pre and post pandemic spending. I mean, there's lots of data out there. So, and I'm not, sort of the master of that. So the people can find it, and I think it's out there that Andrew's right. Certainly, there are things that are competing with people's attention and their affection. At the same time, I think the reason that the marketing spend here is going to continue is because even if on a per capita basis you did see more competition, and so perhaps a minute spent on these apps, if they do decline or if they have declined, the total number of people who are participating in the market is growing really, really fast. And so you're increasing the number of people, even if the per user rates of usage are, could decline. And that's both, I think, within specific jurisdictions and across jurisdictions broadly, right? So tons of jurisdictions we expect to open up over the next 5-10 years. And then I think as usability and as functionality improves, you'll get more access to a more casual type bettor. And I think, there are people who are intimidated by the odds, the probabilities, all this stuff that has to do with sports betting. And the second that someone finds a way to make it more accessible to different cohorts of people, I think that's when you see a rush in, or a more meaningful rush in of consumers. So I think that's how I'd sort of answer it. And just the final gloss on it is, and to put a finer point in it, is that we can't look at customers as a monolith. You got to break them apart into the heavy users, the light users, and medium users, the people who are going to be parts of in-game parlays, the people who are going to be who won't. There's all that stuff that matters, and I think usability and functionality matters more to some groups within that cohort, and then just absolute pricing, and that's all that matters. Matters to other groups. They'll just arbitrage DraftKings versus FanDuel versus Fanatics, just depending on pricing, and don't care about the usability. That has been my experience in my sort of the research that we've done.
That makes a lot of sense. I know we go on different apps to understand the products and perhaps game as well. And I know some that I have clicked on, it does look very overwhelming, very busy. And you tend to, at least if you're someone like me, you tend to shy away from something that is already overwhelming you. Why do I want to put money in something I don't quite understand exactly how it's working, as opposed to an easier, more straightforward interface? Jeff, from your perspective, what do you see in terms of marketing spend and client retention when, like we've talked about, the spend is huge, the retention seems to be iffy. And one thing we see a lot of is use of free to play games, contests, sweepstakes, etc. What's your thoughts on the spend for something like that, and whether that does help retain people as opposed to maybe just bring someone in one time?
Yeah, I mean, we've heard a lot about, marketing spend, and Andrew went over those numbers, which are, obviously very large numbers, especially when you compare them to the lifetime spend of those customers, which tends to be less than the customer acquisition range that he put out there. So, we've heard companies, large companies, publicly traded companies who participate in the space say that they're going to reduce their marketing spend and they're going to eliminate their commercials. Some of these companies are posting, tens of millions of dollars of losses and more, some hundreds of millions of dollars, and they've focused on marketing as something that they have to reduce. But it's kind of hard to understand how you would continue as a viable entity when you've reduced your marketing spend that significantly. And in fact, we're not really seeing that. We're not really seeing a reduction of marketing spend post those comments. And coming out of COVID and everything you mentioned and Melvin mentioned, we're not really seeing that the B2C operators are actually spending less money with their media partners. And in fact, the media partners from Catena to Better Collective to Gambling.com to all the other affiliates who provide advertising and media in this space are getting larger. I mean, they're forming partnerships with all the major newspapers, with the sports leagues, with broadcast television, and if anything, you know, the tentacles of marketing spend and the breadth of it are really growing in ways that seem to, you know, support the notion that they're going to continue to pour money into the industry. It's true there are cheaper ways to acquire customers than you know, than paying CPAs and revenue shares to media companies. It's just a question of how well those clients convert. So free-to-play products and skill-based games, which can create databases of engaged players, those players may not. That's a kind of a top of the funnel activity, as they call it. It may come through the top of the funnel as a free-to-play, and you're hoping a few of those will convert, but you know that not a very large percentage of those may convert into actual real money, you know, spend clients. The other problem, of course, is client retention that you mentioned, and you know, in this industry, it's very common for one customer to have 3 books, 3 sports betting apps. In fact, there are media affiliates who focus on, hey, we can help you keep track of your bets across all these different books, because it gets complicated when you have so many. You know, some people might ask, well, you know, a lot of people have both Uber and Lyft on their phone, but which one do they really use? I'm not sure that that's really the same thing here. I think that people could have DraftKings and Bally's and FanDuel on their phone and use all 3. The other problem is, when you talk about client retention, is clients. This is an unusual app. I mean, they're not using this app that often. Think of when you go to Uber and you need to order a cab. You know, you're not interacting that long with that app. And when you're done until you need it again. So if Uber suddenly wanted to start dropping ads and start presenting all this stuff, you don't really have time for that, because that's not what you're there for. And that sort of needs to change. And the question is, does that change on the B2C operator site, or does that change somewhere else? There's been a long time running that people have been trying to create a one-screen experience that can add TV and add news and add media all to the same place where the customer comes to place his or her bet. And we'll see. We haven't really seen someone do that well. It's in Europe. There's a lot of options, but here there have not been as many for a variety of reasons. But that could be a solution that helps reduce marketing spend and helps keep those clients engaged and retained, so that their lifetime value and their lifetime spend goes up.
Hey, thank you. That takes us to, I think, our third and final poll. Do we think that M&A activity will actually slow into the coming months and into 2023? We've seen, you know, we've seen issues with interest rates and concerns about the economy, and all sorts of global issues. And just wondering from our audience, if you actually think there'll be a slowdown in the coming months and into 2023. Oh, all right. Well, the winner on this one seems to be no, which I think goes along with what our panelists were saying, but it's pretty close. I think there is a lot of uncertainty. So thank you.
Yeah, I mean, I'd be interested in what Andrew's thoughts are here, but I think as a law firm anyways, we definitely saw a lot. We definitely saw it slow down going into the summer of 22 from 21, which just seemed to be insane. I do think that things will pick up generally. I think that there's a lot of slowdowns affecting a lot of businesses right now. So I don't know that this is specific to gaming, but I'd love to hear Andrew's perspective on that.
Sure. Thank you, Jeff. I think that the longer that we see this downturn, you know, in the markets and in valuations persist, I think the more likely it is that M&A dialogue, which is certainly happening right now at a very meaningful pace. I can tell you kind of under the hood, the amount of conversations is at a high level, but there's often a gap between conversations and actual transaction. And I think the willingness to transact by prospective sellers will become greater if there becomes an acceptance that the valuations we're now seeing in terms of the public businesses or even companies in the private markets who are seeing a more tepid reception to trying to raise capital than perhaps they were seeing 1, 2, 3 years ago in the sort of aftermath of PASPA being struck down. Creates a different construct where people, if you're too close to a point in time when your stock was 50% higher, you still think you're valued at that 50% higher level. You see it as a sort of temporary blip that you're being valued where you are right now. But as time progresses and the market doesn't rebound or it continues to go in the other direction, I think there's more of an acceptance of a new normal. And that acceptance then also, I think, causes a, albeit reluctant, embracing of a reality where certain businesses will say, hey, it is the right time for us to sell, even if we're not worth what we were 6 or 12 months beforehand, because I think as Melvin and Jeff and even the poll respondents have addressed, there is a view that perhaps the market's too crowded right now and it's only going to get more crowded. So it feels like there will be some kind of necessary M&A activity to allow some of the cream to rise to the top and to see sort of the number of market participants and competitors that we would expect for the long term come to bear probably in the next call it year, 18 months, 2 years.
Thank you. I know that we're moving right along here, and I don't want to run out of time because we had a couple other topics that I know that people would be interested in, including on the next slide. We wanted to talk about what type of innovative suppliers might be right for an acquisition now. We don't have to name names specifically, but maybe talk about industries, although depending on the industry, that might be naming names, since some of them don't have a lot of competitors. But what are some thoughts on suppliers that might be the types of suppliers that might be right for acquisition? I'll go back to Andrew.
Sure. I think there's some larger B2B suppliers, both in gaming as well as in the broader universe of software and security, who perhaps didn't quickly embrace what was happening with online gaming, but now see that the tailwinds are there and that this is already become a very large market. And without even California or Texas or Georgia or other big markets even have come online yet, this is only going to get bigger. And I think you're going to see some of these broader software security businesses that want to touch online gaming and are going to be more willing to do it as it becomes mainstream. Looking at some of the businesses that have been laser focused on building out different types of technology supply within gaming and getting bought up to become part of these sort of broader platforms. And I think there are some businesses that were already in brick and mortar gaming who didn't embrace online that quickly, but then this broader universe of cyber software platforms that are going to embrace some of the innovative suppliers in this space, and they'll become part of bigger B2B platforms.
Jeff, what are your thoughts on who might be ripe for acquisition?
So, I mean, I definitely would like I definitely think any customer retention technology. I think that, everything Andrew just said, there are some, he didn't call them late adopters, but there are some late adopters out there who didn't onboard this business because of whatever. Is it going to scale? Is it going to work? Is it too much trouble? Is it really, is it really possible to figure out what's legal here and what's not legal? And it just seems complicated. And I think that's changing. And as a result, I think you're going to see more private dollar investment, and then you'll also see some acquisition along those lines. One of the problems here that Andrew raised in his comments before, his most recent ones, is that as M&A acquisitions slow down, what that means is that people people are having trouble essentially raising public dollars for their company, and then without those dollars, they can't go out and make these acquisitions to grow their companies. And that's a problem. A lot of people who are entering this space or were entering this space hoped to rely on SPACs and other types of public acquisition activity that would raise money for them, not because they wanted to throw it all into marketing, but because they wanted to go grab some assets to build a different looking product, to have a different type of marketing strategy. And that unfortunately didn't happen, and it's leaving a lot of people on the sidelines right now. And so I think that as those, I assume it's going to eventually change, but when the markets recover and when we go back to more of the ironically COVID level of acquisition interest that we had in this industry and beyond, I think that, and I don't really think that the interest we had to do with COVID per se, because people were at home. I really think that's the issue. I think that this industry really started on the heels of a decision in 2018 on the sports betting side, and on the iGaming side started a little bit before, but you only recently had states like Michigan and Pennsylvania with their huge markets coming online, and then Connecticut as well. And so that all was happening between 18 and 19 into 20. It was logical that it was going to become extremely popular and in late 2021, and that did overlap with COVID. But I don't think that people at home necessarily contributed to this industry on getting on steroids. And I think that I think it is impacted because although those high level discussions are happening, I don't think that there is public money being thrown into some of these companies to allow everyone to see what they can do with those dollars and who they're going to go after. But Michelle, we've seen people acquire, that someone mentioned loyalty rewards, and we've seen a loyalty rewards client that we had get acquired. We've seen free-to-play clients get acquired, skill money gaming clients getting acquired, DFS clients getting acquired. And those were customer acquisition reasons and other reasons. But DraftKings and FanDuel are making a lot of these types of acquisitions, and they're very intelligently integrating those products in a way that's going to make the customer experience better and continue, I assume, to allow them to retain that rather large, oversized market share that they have currently and beyond. So I think that although I don't necessarily agree that we're going to see a B2C brand gobble up another brand, I'm not sure we'll see that for a variety of reasons, but I do think that we're going to see a lot of tech-heavy innovators be acquired by some of the leading B2C brands.
Right. I was going to say it might give some people a chuckle when I say that sometimes we get swag from these technology clients, T-shirts and hats, and then quickly they become collector's items because they've been acquired. And so everybody, somebody was asking me for a shirt from one of our folks that got acquired, and I said no, I'm keeping that one. We actually had a really good question I saw in terms of whether the prospect for more iGaming in the States would potentially increase M&A activity as viewed as a favorable development, meaning something else you can offer in addition to traditional sports gambling. And it makes sense to me that it would, but I'd welcome your thoughts. We'll go back to Andrew for a minute.
Yes, I think that the growth in iCasino, right, and the extension into more markets, more states, is likely to drive more M&A activity because it will increase the importance of the iGaming content, the content being the types of games that the operators can provide. And as we've all talked about, I think over the last 45 minutes or so, the focus on a differentiated user experience, creating something that's fun, different from what the competitors are providing, is becoming increasingly important on the sports betting side. And as more markets accept iCasino, the ability to have differentiated games is going to be incredibly important. So I think, most specifically, you'll probably see businesses that have focused on developing content, known as the content studios, become likely targets for the operators that are going to want to control the existing content and also have the ability to create new and different content that will drive more engagement on the iCasino side, which is generally a higher margin business than the sports betting side. So it, all in all, should increase the M&A activity if there's more sort of regulatory acceptance.
Jeff, any quick thoughts on the iGaming piece?
No, I mean, if you're listening today and didn't participate in yesterday's webinar on iGaming, you missed a really good one, but there will be a video of it available, and you should listen, because the statistics, to Andrew's point, as to in Michigan, from the head of the Michigan Gaming Commission, as well as the senator who was primarily responsible for legislation there, when they talk about the dollars in iGaming compared to sports betting, it's a whole nother conversation. And it took a while for some leaders in this business, like Playtech, and to come over to the United States, because we weren't maturing as an iGaming market. But when Pennsylvania and Michigan came on, with their populations being 9 and double-digit million, respectively, those are very nice sized markets. And if we can, Illinois has an interest, and that's what iDEA spends the most time doing as an organization, is trying to make this case and make this argument. And from a numbers perspective, it's a very easy argument. There are other concerns that come up with legislators around legalizing iGaming, but from a numbers perspective, it's very easy. And Michigan, has gone all in on iGaming. And when you have big players come over to the market like Playtech and offer online and live casino products, live studio casino products, which create incredible partnerships with land-based casinos in a way that can create partnerships with casinos who have traditionally, at least up until recently, and some continue to be opposed to this industry because of their concerns about cannibalization. And when you create those partnerships and can actually have an online supplier driving traffic to a land-based, it's a win-win for everyone. And I think that Dan's question was a good one, and definitely would see that there would be a lot more significant M&A activity as states turn on iGaming, and much more so than sports betting. I mean, to me, turning on California for sports betting would create a whole new level of volume. But is it going to correct the customer acquisition problem we talked about before? I don't know. But turning on iGaming in a state like Illinois would be tremendous, and it would be a win-win for everyone involved, and certainly spur a lot of M&A activity.
Okay, we had another question, which I think is an important one, about how important is responsible gaming in M&A activity. Just sort of thinking off the top of my head, I would say if there's an operator who's had a problem following responsible gaming requirements at the state level, that could be something that the regulator looks at when you are going to the regulator for approval, among other issues. But any other thoughts you might have, either Andrew or Jeff, before we move to our last slide?
I'll defer to Jeff on that one.
So, responsible gaming, it's Responsible Gaming Month, actually. So, timely question. Responsible gaming is obviously a cornerstone. At iDEA, we have issued our responsible gaming initiatives, as well as a policy that's on our website. The American Gaming Association also has its own responsible gaming initiative. The sports leagues now are adopting responsible gaming initiatives. Listen, as an industry, every single player in this vertical needs to get behind responsible gaming initiatives, because we can't allow legislators and others to believe that the proliferation of online gaming is going to lead to problems with problem gaming, or that advertising will lead to problems of problem gaming. There are not actually established studies to support either of those two theses, but we hear them all the time, and we can't ignore the situation that there is and that there are individuals out there who do have problems, and there is a belief that if you are online somehow, that your problem can't be detected. And so, I mean, that's simply not true, of course. And there are a variety of online tools that B2C operators all use in order to audit spend, frequency, and they also work together. There are databases that each state regulator provides so that all operators are familiar with the spend of customers, not and who's placed themselves on banned problem lists, either voluntarily or involuntarily. There are also media companies who are working with operators on solutions to allow operators to have a view of how much a consumer is spending across multiple books from a responsible gaming perspective. So I don't know that shareholders are demanding this. I don't know that in a transaction an investor is demanding to see this. I haven't seen that yet. I haven't seen it become like a market requirement. But certainly, as Michelle alluded to, no operator and no one in this ecosystem can afford any type of scandal related to responsible gaming. And we've seen those, unfortunately, in the EU. And as a result of those, everyone here is paying attention. I mean, the UK recently imposed a fine of over $17 million on a operator there for violations of responsible gaming. So it's not just the amount, the quantum of that fine, which is unreal, but it's also I don't mean unreal that it's not justified. I mean unreal that we don't see those types of fines in the U.S. on casinos being imposed by regulators. So it's a very, very large and very serious fine, and operators here are paying attention to that. They're paying attention to problems that have already been experienced overseas by their competitors or their European partners. They're very determined and focused on not seeing those problems here. And they're very focused as a result on how to work with the National Council on Problem Gaming and others to ensure that we don't see anything like the problems that have been experienced in Europe.
Okay, we're going to go into a rocket round now for our last question. How about exciting startups on the horizon? I know at our firm, we do host the IFRA Law Pitch, where we look at various startups and we award some legal time as well as other awards. What kind of exciting startups might be out there, whether it's names or industries? Some thoughts. I know we've seen some having to do with responsible gaming. We've seen some that try to promote greater involvement by women in sports industry and sports gaming. But any other thoughts that you might have? We'll start with Andrew and then go to Jeff, and then it's going to be a wrap.
Without naming any particular businesses, I think as a theme, any companies that are focused on turning online gaming into a more fun, social, community-oriented experience that is true entertainment as opposed to a financial transaction are going to be ones that win.
Interesting. Okay, Jeff, to you.
When you talk about startups on the horizon that are exciting, actually, you might want to go right away, start thinking of like a new operator, a new product, a new this, and what Andrew said is a good case in point. But we've seen startups in, how about a new sports league as a startup? It's so interesting that we can talk about that. The USFL was a startup. It was a renewed league. But it very much leveraged the legal sports betting environment that existed when it refreshed itself. And we've seen, Michelle, we've worked on the National Rugby League. We've seen professional bull riders league. These leagues are leveraging sports betting. We've talked to lacrosse. We've talked to both professional lacrosse men's and women's, and how can they get involved in this, which creates a variety of very interesting scenarios. I mean, sports betting is now actually helping improve and increase the eyeballs of X sports and challenging sports and all sorts of different types of sports that didn't have a humongous following, but now through sports betting may be able to increase their national footprint, which is just a really interesting way that the sports betting community and the sports betting operators can actually assist these very exciting but not necessarily NFL level popular sports, although they have tremendous followings, which are really fascinating. We saw that happen with NASCAR already, as NASCAR got into the space as well. So startups aren't necessarily limited to tech companies. We saw an announcement last week with Ohio that Kroger grocery chain has applied for a license to put betting kiosks into their supermarket. So not a startup, but it's kind of an interesting idea of a major corporation that does billions of dollars in sale now deciding to take on, and that point is there are there are companies out there who have existing customers, and the question is can sports betting help further monetize those customers? And so that's a different way of looking at a startup on the horizon that is really leveraging the industry rather than necessarily coming in to kind of help a struggling operator. But that's all out there as well, and it's and we've seen a lot of people, not just and also Andrew mentioned before, the NFTs and the blockchains and all the different things that are going to further increase fan engagement, while at the same time potentially creating engaged customers who may want to further participate in sports betting. So there's a lot of exciting things on the horizon.
Great, thanks. Those are some really eye-opening thoughts. And I was going to say go pickleball, because that's another one that I see. There was like some
Yes.
championships the other day, and they're very good. I mean, it's like world class, tennis type activities. Anyway, well, thank you to our panelists. I know Melvin had to attend to another matter, but we're going to thank him as well. Thanks, Andrew. Thanks, Jeff. Thank you to iDEA and GeoComply and everyone who attended today. And you'll get the recording as well as the survey. Please complete that, and we hope to see you again. Have a great day.
Thank you, Michelle.
Thank you.